Hello traders and welcome back to the Forex Geek. In today's video we're going to be talking about a proven GBPJPY trading strategy that delivers consistent results. This pair moves an average of 100 to 150 pips daily, making it one of the most dynamic pairs in the Forex market. You will learn exactly how to spot entry points, stop loss, and how to set stop loss placements and take profit levels that work in current market conditions. Pay close attention as each component of this strategy builds on the next, showing you how to effectively trade this volatile pair. So without wasting any much of your time, let's get started. Let's first of all understand the GBP JPY pair. This pair combines the British pound and Japanese yen, representing two major economies with distinct characteristics. The pair's movement is primarily influenced by the economic conditions of both the United Kingdom and Japan, particularly their interest rate differentials and economic policies. So, what makes this pair unique is its typical daily range and reaction to market events. During active market hours, particularly when both London and Tokyo sessions overlap, the GBP JPY demonstrates increased volatility, and this creates distinct price action patterns that you can learn to recognize and trade. So, the Bank of England's monetary policy decisions and Japan's safe haven status significantly impacts the pair's movement. When global uncertainty rises, you often see sharp movements as traders shift between risk taking and safe haven positions. So, understanding these fundamental drivers helps you anticipate potential market moves, and the pair typically shows clear trending movements followed by precise retracements, and this can create optimal trading opportunities. As you can see on the charts, you have clear trends. GBP/JPY is known for its clear trends. If it's bullish, it's bullish. If it's bearish, it's bearish. So let's talk about the key trading strategies you can use to trade GBP/JPY. Let's focus on the trend following strategy for trading GBP/JPY. So this approach is effective due to the pair's tendency to form strong sustained trends. To implement this strategy, start by identifying the overall trend using higher time frames such as the daily or 4-hour charts. As you can see, I'm now on the 4-hour chart, and I'm trying to identify the overall trend. As you can see, this is a bullish trend right here, as you can see. So after you've spotted the chart, look for a series of higher highs and higher lows for an uptrend, or lower highs and lower lows for a downtrend. In this case, I have a series of higher highs, and looking to create another higher high here, but it's not guaranteed. So we are clearly bullish in this case. We have higher highs, higher lows, higher highs, higher lows, higher highs. So this is clearly bullish. GBP/JPY right now is clearly bullish, even though it seems we've broken this structure, but it is not confirmed yet until we continue to break it before it will be confirmed a valid break of structure. So after you've spotted the trend, once you've identified the trend, use moving averages to confirm its direction. The 50-day and 200-day moving averages are particularly useful. In an uptrend, the price should be above both these moving averages. So I'm just going to add the moving average indicator. I'm going to add the moving average indicator to help us get okay, I'm having a bit of misunderstanding. Let me use this. Okay, this is it. I'm gonna add the simple moving average to the charts, and we have the simple moving average. Okay, this is back up. Okay, let me use this. So I just added the simple moving average to the chart, and I'm gonna add the 50-day and the 200-day moving average. These two moving averages, they are particularly useful, and when they cross, they signal the golden cross. when using both of them. So having slight network issues. Okay, the length, I'm gonna set 50-day moving average, and here I'm gonna set it to 200-day moving average, and the style should be the 200-day moving average is the red line, and the 50-day moving average is the blue line. Okay, so I'm just gonna set it, and this is it right here. So we have this as our moving average. Now, one in an uptrend, the price should be above both these moving averages, with the 50-day above the 200-day, and the opposite is true for a downtrend. So remember, the 50-day is the blue line, while the red line is for the 200-day. So notice how price stays above both moving averages during this uptrend. You can see as price stays above, especially the 200-day moving average, it stays above both moving averages in this uptrend, as we had series of higher highs and higher lows. So the key to this strategy is entering trades during pullbacks in the direction of the main trend. So wait for price to retrace to a support level in an uptrend or a resistance level in a downtrend. These levels often coincide with the moving averages or previous swing highs or lows. So let's try to look for examples. Remember, the very first step is that price should first be above the two moving averages. You can see price going above the 50-day and the 200-day moving average here. So after we've seen this shift in price, all we should be looking for are these pullbacks. We are above the 50-day and 200-day moving average. We should be looking for pullbacks into key support or resistance levels and continuations, pullbacks, continuations. Okay, let me continue. We have the trend, the push, and the pullbacks into key support levels. If we are on an uptrend, so we're looking at support levels, key support levels, the continuation, pullback into key support level, the continuation, and that is how you can trade the GBPJPY effectively, because the GBPJPY it shows a very strong and clear trend. Whenever it's trending, it trends in one direction and it's very clear. So that's why this is advisable. So after we had this cross, you could look for key zones, key support zones. Like this is a key support zone we have right here. We have this as a key support zone. Just gonna take the whole level, and this is a key support or demand zone. I'll say demand zone. So we should be looking for a retracement or the pullback. We should be looking for the pullback into this demand zone, because price doesn't just move all the way up. There are pullbacks. So when we see these pullbacks, the key is to enter the trade in the demand zone or at the support level for the continuation to the upside. So there are key support levels. You should always draw your demand zones. Always draw out your demand zone. Like this is a major demand zone. Price didn't exactly get into this level, but this is a major demand zone, and we have another demand zone right here. Mark from this area. We have another demand zone, and all we are looking to do is to trade from the pullbacks, to trade away from the pullbacks. We should expect the pullbacks to come into the demand zone and trade away from it. As you can see, we have this wonderful example here. As price came into this pullback, we had this confirmation to hit the buy trade. If you're using your candlestick pattern for your confirmations, you can see several candlestick patterns. We have several key rejections from here. Have these key rejections, these bullish candles, and we have also increasing buying volume, showing that yes, we should indeed be looking for buy trades. You can also see we had here we have this doji, candlestick showing rejection from this area of demand, and there are several confirmations to indicate that we are indeed bullish. This is an engulfing candlestick pattern, a bullish engulfing candlestick pattern. So there are all indications that we should be looking to buy from this area of support or this demand zone. And you can see after that we had this push to the upside. You could just be targeting this key resistance level here for a quick 1:2 risk to reward ratio, or you could just extend it and use your trailing stop loss to follow this trade. So we also have this example. As we had this push to the upside, we have price retracing again into this demand zone formed here, and we have another push to the upside. So this keeps on happening. You can see this resistance turned support level here. So this is a key level we can also use to place our buy entries, our stop loss below. You can see the rejection here confirming the trade. So you could just target this key resistance level right here. So this is a strategy you can be using when you want to trade the GBP JPY pair. So you can see price going below we have here price going below the 50-day and the 200-day moving average. So it means we are now bearish. So we should be looking for lower lows, lower highs, lower lows, lower highs, lower lows, exactly. So we should be looking to trade from pullbacks into key resistance zones. For example, you have this big candle as a major area where there was lack of buying activity, so you could use that as a major supply zone or a resistance zone. So you could just use that to take your trade entries. So the main key thing to know is we are looking to take trades from pullbacks into key zones or key levels, but we use our 50-day and our 200-day moving average to confirm our trades and to ensure that we are in a major trending market. So that's how you can use to trade the GBP JPY pair. So let me just see if I'm gonna spot another trend which I can follow. Okay, this is another trend. You can see price going above the 50-day and the 200-day moving average here, very clear. So we'll be looking to take entries from major key levels. We have a key level here which was a support, a resistance turned support, and we have price reacting from that area here. Just take our stop losses below this level and our take profits at the high. And if you're looking to continue this, you can see this is a major level. Also we have this consolidation phase, and price could come back to fill in this area before the push to the upside. And also we have another demand zone, which is this area like this, and you can see price pull back into this area and give us the push to the upside. So this is just me using the 50-day and the 200-day moving average and pullbacks to trade the GBP JPY pair. And you can see this is also another consolidation. We had the manipulation, then we had the pullback into the zone, the demand zone, before we had distribution. So it's just basically accumulation, the manipulation, and the distribution. So a buy position from here, and we have the push to the upside. So this is how you can trade with this strategy on the GBP JPY pair. We also have advanced strategies which I'm going to discuss right now. We have a strategy called the yield spread analysis. So this approach goes beyond traditional technical analysis. It incorporates fundamental factors that drive currency movements. Yield spread analysis involves monitoring the difference between the interest rates of British and Japanese government bonds. So I'm just going to use a fresh chart to explain this. We are still on the GBP JPY on the 4-hour time frame. So like I said, yield spread analysis involves monitoring the difference between the interest rates of the British and Japanese government bonds. Now, this spread can provide valuable insights into potential GBP JPY price movements. Here's how you can implement this strategy. First, you need to track the yields of 10-year government bonds for both the UK and Japan, and these are widely available on financial websites or through your broker's platform. We are on TradingView, so I'm just gonna go to our indicator library and just type in yields, and we have 10-year yield stable for major currencies. So I'm just going to click on this, and it's going to come out. So next, this our indicator is going to help us calculate the spread by subtracting the Japanese yield from the British yield. So I'm going to edit this to contain only GBP and JPY 10-year yields. So we are left with just GBP and JPY yields. Okay. So we are going to be looking at the yields as they relate to the currency price movement, the pairs movement. So a widening spread typically indicates strength for the GBP against the JPY, while a narrowing spread suggests potential JPY strength. So as you can see on this chart, there's often a correlation between the yield spread and GBP/JPY exchange rate. When the spread widens, the GBP/JPY pairs tends to rise and vice versa. So let me just explain. In areas where we have widening, for example, you can see here we had this increase in GBP yields as opposed to the straight JPY yields here. So this just suggests a kind of like a widening gap between both 10-year yields. The GBP and the JPY yields are we have this widening activity on the 10-year yields. So this suggests GBP strength, and this can cause an increase in the GBP strength against the JPY. Why, if we have a narrowing spread, this suggests potential JPY strength. For example, you see this narrowing between the GBP yields and the JPY yields, and you can see it is reflected on the chart as we have the JPY gaining strength and we have this fall in prices. So this is more of fundamentals than it is of technicals, because we are looking at the 10-year yield government bonds for both the UK and Japan, and looking at how their correlation affects the currency pair price of GBP/JPY. So to use this information in your trading, you should just look for significant changes in the yield spread. A sudden widening might signal a potential long opportunity in GBP/JPY, while a sharp narrowing could indicate a short opportunity. We have this sudden widening, and this could be we should just be looking for areas to buy. Remember, in the last example where I was talking about the moving averages, you could also use combinations with technicals like a moving averages to confirm if this is also we are starting a bullish trend. I remember we had a cross around this area, had a cross from in price above the 50-day and 200-day moving average around this area, and you can see around that area we had the confirmation from our yield spread analysis as we started having this increase. We started having this increase in yields, in GBP yields, and this also means increase in GBP strength, and so we should be looking for buy opportunities. We also have this aligning with key support levels like this one. Also, we also have a trend line. There are so many indications that indeed we are looking to buy. This is also a trend line, and we have increasing yields, widening yields, so we should be looking for buys only. In our moving average, we just had a cross from below 50-day and 200-day moving average to above it. So this is just a clear buy trade with our stop losses below this area, and we could be looking to take this buy trade for as long as this widening continues. That's how you can use the yield spread analysis to trade. Combine this analysis with technical indicators like I've discussed. You could use the moving average, or you could use a bullish chart pattern forming, as this could strengthen your conviction for a long trade or a short trade. So there are so many examples. You can see here we have increasing. You can also use this for divergence also. You can also use this for divergence. where we have increase in price, but the the yield spread analysis on GBP is giving us decrease and is giving us a decline, or we have this narrowing. So you could be looking for lower prices instead of higher prices. That is one way you can use to also combine and trade with the yield spread analysis. We have narrowing GBP spreads here, and we have at the same time the short trades going on here. Also, you can see here we had this narrowing, and you can also see the lower prices on the GBPJPY. We have this narrowing here also between the GBP spreads and the JPY spreads, and the same thing, we have these short trades going on right here. So we have the increase in here, which is, as we can see, with this increasing. So this shows that indeed we should be looking for higher prices. So this is how you can use the yield spread analysis to trade. Just use it as a filter for your existing strategies. You might choose to only take long trades when the spread is widening and short trades when it's narrowing. So alright traders, you've come to the end of today's video. I hope you found this video insightful and helpful. If you did, hit the like button and subscribe to the channel. Turn on the notification bells to stay updated with our latest Forex insights, and so you won't miss an update. Thank you for tuning in, and until next time, happy trading.